Hey guys, can you hear me? So it's Armand from Cool Trading Tools here. Good morning. So we're gonna go over a few things today. There's a lot of interesting things going on right now. So we're gonna go over the market, the Nasdaq, the semiconductors. Gonna go over a few day trade ideas. We're gonna go over a couple lessons on things like small cap momentum, a trade that I'm currently taking, like right now in the moment. So we'll go over a few things like that because the watch list is actually pretty thin right now, and I think it's just a product of the market that we're in right now. So let's just start with a couple things. So right now we're looking at the Nasdaq. We have a big event today, the CPI this morning. Let me get that pulled up. So we got CPI this morning, PPI tomorrow. These are kind of big economic drivers. We also have bank stocks reporting, XLF. So we got WFC, C, JPM, Goldman Sachs. So all these are reporting. So there's a decent amount of that stuff going. I don't really trade the bank stocks, but a lot of people will just be paying attention, the grandpas and things like that about those. So, and they may affect where money rotates into and everything like that. So that's what's going on from the economic perspective. The CPI comes out in about 15 minutes here. That'll be the big one. And right now, the market's in kind of a weird location. I don't see a ton of ideas, actually, but let's see what happens here from when the CPI comes up. So let's just go into the review real quick. Right now, we're watching this tightening range on the QQQ. And ideally, like I said, we're kind of in this box here. We will be looking when we get down to here or up to here, and I think those are two lines in the sand where then we can kind of make decisions. Do we want to play for a short against this level or a long and break out above? Vice versa, a short against this level or a fake breakdown and get long off that support. So I think that's what we kind of watch and wait till we get to those areas. It could be in the coming days. The CPI reaction could be aggressive, and we'll see what happens when that happens. The war is kind of picking back up. And like we said in the previous videos, headlines were getting ignored here. Headlines are now affecting things right now. The market's sentiment driven. So, depending on how things escalate or de-escalate with the war, could be an actual driver of what happens going forward. Semiconductors, like I said, weaker than the Nasdaq, also kind of in a tightening range here, right? Bam, low, high, low. Now we're kind of in this range here, and we can kind of watch for that. Wasn't planning on talking about this, but there are better looking semiconductors. MU off the 50 SMA, AMD relative strength here, so that's something that you could be watching here. I don't love when it's been consolidating for a month and a half now. It kind of is taking forever on that. Dell's another name with relative strength that I've been you could watch for a swing trade idea. Like I said, I mean, big move. It's hard to know. It can take sometimes the consolidation, a good relative measure. Consolidation, relative. Actually, I use it more backwards. The range of the breakout, how long is like you can expect to hold, is correlated a lot of time with how long the consolidation happens, not necessarily vice versa. How long the consolidation happens based of how long the breakout was. But huge move on this company. Wouldn't be surprised if it kind of hangs out here for a while. It could be a swing trade. I know a lot of people are looking at relative strength, and it is relatively strong compared to the market, but we'll just have to see what happens with that going forward. So I'm not necessarily going to be playing it, but I know there's a lot of people that are watching it for swing trades, and I see that. I see the idea there. So let's go into a few things here, right? So let's start off with the IBM bounce trade. So IBM today is getting absolutely smoked on, they released earnings a little bit early here, right? And we'll go here. We'll show exactly kind of the trade idea here. So I was looking at a 5-minute, what's called a stair-step pattern, where it gets smoked. No 5-minute candle broke the previous candle's high right here, right? None. And then I was anticipating that around this area that we would maybe get that, and we have. So now I've taken the trade and I put a stop below the low here, 1774, right? Why do I do that, right? So a couple reasons here. First, let's just hide the volume here. I highlighted it. I was watching the 1 minute chart, which correlates with this right here. Look at the volume start to pick up right here. We get the hammer candle and we get the highest volume we've seen as the whole drop was happening. What does that mean? Is that now the pressure is getting intense, but instead of just sinking down like on candles like this, it actually turned into a hammer candle, which means there's buyer was coming in. Buyers were meeting the sellers at that point, and it turned into the buyers winning on the strength on the short 1 minute time frame. That was enough for me to kind of take a risk off here. I took it 219.94, 219.94, with a stop at 217, below this 217.70, and so it's about a $2 stop, with the intention of maybe selling into like the VWAP here was kind of the goal here around 230. So potentially $2 a risk for about $8 to $10 a reward. Just a quick trade. It's not like a freaking gonna make a big old difference or anything, but it seemed like a pretty simple, obvious trade here. I mean, 22% on a size company like IBM is pretty huge. But this is just like a little teaching lesson on the setup is what's called a stair step pattern. You wait for the first 5 minute candle to break. It's high, and you could take it actually here, on one of these candles. I, though, wanted to anticipate it a little bit using the 1 and 2 minute charts and the volume to kind of show me that, okay, the volume held up here at the highest volume and was actually the buyers winning that exchange there. So that was the trade idea for that. And we're in it right now. We'll see if we stop out or we'll sell into the 230s level here. Next thing I wanted to go over, let's go over another trade idea here, SpaceX. I've been kind of on this last week or two. If you've been watching, I've been watching for this breakdown, and we finally got it. It's now broken its levels from like its IPO and had a big follow through day yesterday. I think this is something that we can still keep hammering. I don't really want to chase lows here. It's had 1, 2, 3, 4, 5, 6, 7, 6 out of 7 days down. So it's getting a little bit like not extended. It will just go. Two things I'm still interested in it. The volatility and range is still there, and that's like my main criteria. If we start to get smaller candles and a drift lower, then we probably become a little bit less interested in it. But the volatility is still there. So I think we can look to maybe short it for like an hourly bounce here, runs maybe into this 9 EMA, pushes to like this 240 area, 240, mid 240s, and rejects off that. I think that's a good spot to look for on the 5 minute chart for opportunities to get short on that. So like you could look for, like we're looking for an hourly lower high compared to like, let's just say this level. You'd look for on the 5 minute chart like a 5 minute bull flag, it would look like, but then it breaks low. It's a failed bull flag. And that's why I don't like using the terms bull or bear flag, because it's all relative to where the consolidation happens here. If a 5 minute flag is happening here, I'm actually looking for the short because I'm expecting on the higher time frame a lower high compared to the hourly. So I think that's a good lesson there as well, than where the consolidation happens in the context of the larger time frame is actually what's important. So that's something that I'll be watching on the day, but like I said, I don't really want to hit it at lows because it's just getting a little long in the tooth, and I'd rather short into bounces, but I do think that's still an opportunity there. So let's go into the small cap lesson I want to go over today, because I wasn't surprised to see NXTC hopping up here 450%. Yesterday we got a huge runner. A lot of people were watching. This V went up 637%. And this causes two things, right? I don't trade a ton of small caps, but sometimes in the occasion I will if this sentiment is right. So this can do two good things. It does one good thing is that you're not surprising going to see people chasing and stocks giving momentum like the small cap sector the next following day or even week, right? Because people get excited about that. People miss this move, so now everybody's looking for the next move. So it can be a good opportunity in that situation. It's a double-edged sword though, in the sense that yes, there will be more runners because people are looking to chase that hype and find the next VEE. The other thing is, though, there will be a lot of runners, so none of them really hold up. A lot of them get a lot of fake breakouts. They get one push and then they're done because there's a lot of attention from the small cap traders spread thin. So everybody's kind of like looking for the next one. And so attention is spread thin. So that's kind of the two things right there. After a big runner like that, you will get more runners, but it's cognizant to be, don't be looking to hold into like some trend like this or something like that, which you shouldn't really be often. You should be scalping these, I think, in my opinion. But a lot of them will not hold their gains because the attention is spread pretty thin on that stuff. So just checking IBM here. Hopefully that's setting the 5-minute lower high here. Like I said, we stop out on it. It's just a $2 risk. I think that it was a well-justified trade on that. So that's just a little less on the small cap thing here. The next thing I want to go over is the market is getting, it's getting a little slow, unfortunately. We'll see what happens in a few minutes here with the CPI numbers, but a lot of things are just, the range might still be there for this example, this SNDK. The range is still here. It's still giving great range. I just don't have any really idea what to do with it directionally. It could break lower and crash. It could bounce up and do that. It could just stay in the middle here and range deteriorate. I just, at this point, it's not easy as like when you get to here. The trend was easy. On the initial breakdown, you know that there's going to be some volatility to the downside. Now we're kind of hanging out a little bit here, and it's tough to know what is going to happen directionally for me personally. Same thing with Soxel, which is like the SMH semiconductor ETF. Same thing. To me, the volatility breakdown was kind of obvious around this last week and a half. Now I don't know what happens. Does it base here and just chills for a little bit? Does it break lower? I don't personally see a directional edge in there. The volatility edge is there, but it's kind of in no man's land, and it's kind of like you're just guessing then at that point. Same with, I'll just show a few examples. NBIS, you can see a lot of these now have gone on these giant runs, a lot of names, and now they're kind of drifting lower, or even if the volatility is still there, I am having trouble finding any directional bias on there at all. So same thing with HUT. HUT is another one of those names. AAOI. This is one where the volatility and excuse me, the direction is obvious now. It's a bearish trend on the daily chart, but the volatility is worn out compared to here. And you can see on a lot of these names, maybe we should go back to them. Look at the volatility has gone from that to, SNDK starting to turn down. It's still giving great volatility, but it's not surprising that some of these, if you look at the ATR, range is going down. MBIS, the range is starting to turn down. So it's there, the range is still there, but I don't really have an idea directionally on which way to take it. So let's see what we're at for time here. 13 minutes. So we're getting a little long in the tooth here. So I wanted to, like I said, today I felt like a little unsure of what to do. We'll see in the CPI here in 4 minutes. That could really give some good guidance here. Like I said, I really want to see when we get on the NASDAQ to this level or this level. And then based on, really, if we go up, I'll probably be looking long. And if we go down, I'll be looking short. I'm not going to be looking for a hold of support or a short against that. I'll be probably looking for a break above or a break below. But I think you want to wait until you get to these levels here, right? And then see how the intraday action reacts. And then you can play against that during that. So I think that's the plan for the day. Tried to feed in a couple lessons here on just like how I'm taking trades on the IBM, what to do with the SPCX and like the intraday flags, and not using the terms bear bull flag because it's all in context of like the larger time frames, and then the small cap stuff as well. So just trying to keep it informative while we have kind of right now what is a slower period of time in the market for my style of trading, and I think a lot of people's style of trading as well. Initially the swing traders got kind of their setups have been failing, but the volatility was still there for the day traders. Now I'm seeing a little bit of lack of volatility. And like I said, what we talked about this before last week is what we focus on in these situations is we find stocks that have their own story going. You don't necessarily follow the market then. You can trade what an individual stock is doing that has its own volatility and range, and you kind of can focus in on that here. So I think that's kind of where it is. Do your scans, find something that's moving to its own beat. Kind of like IBM here, right? Had the freaking pre-release earnings. This isn't like a super hot trade, but you know, it's there. So awesome. Have a good one, guys. Have a good trading day. I'll see you tomorrow.